Have you ever wondered how your beliefs can shape your trading performance? Well, let's dive into that. Beliefs, those subtle and sometimes not so subtle convictions we hold, can be a powerful force in trading. They have the capacity to shape our perception of the market and, by extension, steer our trading decisions. Imagine the market as a vast, ever-changing ocean. Your beliefs are like the rudder of your ship, guiding you through the tumultuous waves and unpredictable currents. A belief that the market is an opportunity-rich environment can inspire confidence, triggering decisive action. Conversely, a belief that the market is a treacherous, risk-laden territory can breed hesitation and missed opportunities. Recognizing and understanding your own belief system is a vital step towards successful trading. It's about knowing what's steering your ship. So remember, your beliefs and attitudes towards the market can be your greatest ally or your worst enemy in trading. What separates the successful traders from the unsuccessful ones? A question that has been asked countless times, and yet the answer remains elusive to many. It's not about having the best strategy, nor is it about being the smartest in the room. The real answer lies in the trader's mindset. The first key aspect of a successful trader's mindset is the ability to embrace uncertainty. Markets are unpredictable, and this is a fact that successful traders not only accept, but also thrive on. They understand that they cannot control the markets, but what they can control is how they respond to them. They see uncertainty as an opportunity rather than a threat. Next, successful traders remain open to all market possibilities. They don't let their preconceived notions or biases cloud their judgment. They understand that the markets don't care about their opinions, so they remain flexible, ready to change their perspective as the market data changes. Their ego doesn't get in the way of their decision-making process. Another crucial aspect of the trader's mindset is focusing on the process rather than the outcome. Successful traders don't obsess over individual wins or losses. Instead, they concentrate on executing their trading plan with precision. They understand that if they stick to their plan and make good decisions, the profits will follow. Discipline and patience are the bedrocks of a successful trader's mindset. They stick to their plan, wait for the right opportunities, and don't let impulsive decisions derail their success. They know that good things come to those who wait, and that patience is indeed a virtue in trading. However, perhaps the most important element of the trader's mindset is emotional detachment. Emotions can cloud judgment and lead to poor decisions. Successful traders keep their emotions in check, making decisions based on logic and data rather than fear or greed. So if you find yourself struggling in your trading journey, it might be time to look inward and evaluate your mindset. Remember, trading is not just about strategy and analysis, it's also about the mindset. Have you ever experienced fear or greed while trading? We've all been there. It's the thrilling rush of adrenaline when you see the market moving in your favor, or the stomach-churning anxiety when things don't go as planned. These are just a few examples of common psychological pitfalls traders often face. Fear and greed can cloud our judgment, causing us to make impulsive decisions. Overconfidence might lead us to take unnecessary risks, while revenge trading can trap us in a vicious cycle of loss and regret. Recognizing these pitfalls is the first step to overcoming them. But how do we do that? The answer lies in self-awareness and emotional control. It's about understanding your emotional triggers and learning to manage them effectively. It's about staying grounded in the face of market volatility and not letting your emotions dictate your trading decisions. Remember, overcoming your psychological pitfalls is not an overnight process, but it is an essential step towards trading success. So, what are the key takeaways from this chapter? Firstly, we learned the pivotal role of our beliefs. Our beliefs shape our thoughts, and our thoughts shape our actions. In trading, as in life, what we believe is what we perceive, and what we perceive is what we achieve. Next, we delved into the trader's mindset. We discovered that successful trading is not just about having the right strategy or understanding the market. It's about having the right mindset. It's about being disciplined, patient, and above all, adaptable. Finally, we tackled the psychological pitfalls that can hinder our success. Fear, greed, and overconfidence can be our worst enemies. But with self-awareness and self-control, we can overcome these obstacles and turn them into stepping stones towards success. Remember, trading isn't just about numbers and charts. It's about you, your beliefs, your mindset, and your ability to overcome your psychological barriers. Master your mind and you can master the market. That's the heart of trading in the zone.